Welcome back, traders and investors, to our last guest of the week, Don Kaufman, Chief Derivative Instructor for Simpler Options. Don, how you doing on this Friday morning?
Great. It's bright and early here. I'm on out in Arizona, so we're on West Coast time.
Okay, getting up early here to join us on the show. We appreciate that. So, how did you get interested in the options markets?
I grew up around options trading. I had some family members that were market makers in Chicago. They owned a couple of hundred seats actually in Chicago,
Who was
exchanges
that?
around the world.
Who was that?
Yeah, O'Connor and Associates.
You're kidding me.
Yeah. So my uncle was the founder of that company. So I grew up around it, man. I've always been around derivatives, arbitrage, you name it, man. That's been.
Were you ever on the floor?
Yeah. I actually I trained down on the floor before they moved me upstairs to manage risk for part of the firm. So I was down in the SIBO 98, 99,
Okay.
and the beginning of 2000.
Yeah, you're a little bit younger than me. I left the Merck floor in '92, but I remember O'Connor doing they were big in the grains, right? And then
Yeah.
I remember for a while the SPU OEX was a big spread, and I can remember them coming in with some size and trading there. So wow, great family. Are they still around? They get bought out by somebody?
So in '92, he sold most of it over to the Swiss bank, which still like kind of the driving force behind like UBS, that real small like arbitrage unit in UBS. So they'd been out of it though for years. By the time I got involved, I worked for kind of a small offshoot, one of the original partners, and it's just being around it my whole life. It I guess more intriguing than anything. I didn't learn that much from like family members, but it was more or less just being around it kind of drew me into it.
So you had an interesting job. You were the director of the trading group at TD Ameritrade. I've had up some trading operations before, and sometimes you get the opportunity to learn from others' mistakes when you're looking over a group of traders. Tell us about your experience at TD Ameritrade and some of the important things that you took away from it.
Yeah, so that was quite a long run there. Even before TD Ameritrade, I was kind of invited at about the ripe old age of 25. I actually joined what at the time was a startup, was thinkorswim.
Yep.
And so it was in Chicago. It was thinkorswim. I ran a bunch of like their education division and actually built the education around the thinkorswim trading application. So we went through everything from, the original private equity deals to going public to another merger to eventually the TD Ameritrade deal. So at some point we went from, roughly about 20 people to, over the 15-year period, we had 7,000 people. So yeah, there was a lot of bumps in the road, a lot of mistakes in the, along the way. Probably some of the biggest takeaways from it, you learn so much in an operation like that, but I always stayed really focused on trading. So I've traded throughout, the operation. Actually, most of the guys there trade quite heavily for years, at thinkorswim and TD Ameritrade. The people that work there are actually some of the biggest clients in terms of executing positions for their own accounts. And we learned from client mistakes over the years. I know that sounds crazy, but so you're looking at a few hundred or a few thousand different accounts in a day, and probably the most invaluable experience looking back on it. For a while, I was on the risk management team of the firm. You basically got to see when anybody was in like severe trading trouble, well, those accounts actually popped up in front of us, and you just learned immense amounts from it. It's great. I mean, really great experience. I hate to say this, learning from what everybody did, that wasn't so great. Nevertheless, that's the kind of stuff that can help you in your trading.
Did you know anybody over at Thinkorswim Advisors?
I know everybody at thinkorswim Advisors. Still talk to them all the time.
Paul Dunbar and Bob Stapleton?
Yep, good friends with them.
Oh, really?
Yep.
I
Yep.
grew up with Paul back in the day. Still a great friend of mine. I'll have
My
yeah.
my wife is actually from the Detroit area, so I'm back there a lot, and we'll from time to time possibly partake in a few beers with
Oh, maybe.
those gentlemen.
Yeah, maybe one or two. Great. I'll have to tell him that. So education courses that you have now, what do you emphasize?
So I'm not just about like premium selling. Um, I'm a little bit of an options geek, but when it comes to different products, I don't discriminate. I'll trade stocks, options, futures. I am less of a directional trader than are most. I'm much more what they term kind of market neutral. I don't make technical analysis necessarily the forefront of what I do. Sell premium and try to manage the risk behind doing that. Volatility is a little low, obviously, the last couple of years, so just kind of had to augment strategy to circumnavigate some of the lower volatility, in the last few years, and it's been low. I mean, the last real bump in volatility we've seen is since 2011. So where's the fun in that? You know?
Yeah, so how do you manage risk when you're selling options? Do you do it with the stock, or do you just keep if you're getting one way or another, you use the spiders or the futures? I mean, how do you do it on a individual basis?
So I'll tell you how I do it, and then I'll tell you how I teach people to do it.
Oh,
uh,
no. No,
and
no,
that's
Doc.
okay. It's so I trade size enough that I have to use futures to manage it. So I'll get long or short a few thousand deltas, like in the spiders. I'll get long, like all of a sudden, like 3 or 4 thousand deltas, or I'll be short 3 or 4 thousand deltas. I'll just chop off my risk buying one or two or selling one or two futures. Most of the time, like when I'm teaching people to do it, they're already in defined risk trades. So introducing like a futures contract is not necessarily
The
like a
best
good
thing,
thing in that,
right?
yeah, in the defined risk kind of equation, because they'll end up losing more in the futures contract. So I'll actually take them through a few defined risk option strategies to kind of mitigate the risk of the stuff they're already in. People try to fix individual trades when they don't look at like the sum of their positions. That's one of the big mistakes I see is that they'll do something in the SPX and they'll try to like fix an iron condor in the SPX when ultimately you got to massage the entire position and not worry about the individual trades, which is it's one of the more difficult things to get people into because everybody kind of looks at like their positions autonomously. They got something on Apple and they got something in the SPX and they got, something in Microsoft over there. I bulk most of the stuff I do together and manage kind of the aggregate of that risk. And that's a lot of what, I talk about day to day. Simpler options is more the 30,000 foot view, not necessarily looking at an individual trade and trying to, have predictability to markets.
Yeah, just kind of. I mean, I know selling options is definitely. I mean, that one thing about selling options is if the market sits still, you make money.
Yeah.
Not being able to be directional. So you said you don't make a lot of use out of technical analysis. I mean, you got to use some charts, don't you, Don?
All right. I am. I might be called a little bit of like an anti-chartite, just a little bit. It's not that I'm like anti-technicals. You know what? I'll glance at a chart of a product that I don't necessarily know, and I'll glance at like support and resistance and so forth, but probably not going to catch me with a lot of studies up and so forth. I have tendency to be much more of like a quant in trading rather than, a technical trader. It's just something again that goes back to like my upbringing, I guess, around markets. There weren't a lot of charts, around the trading floor, and that's something I probably should have, brought into my own trading from behind a screen. But it's again not really at the forefront of what I do. I sell a lot of out of the money premium and try to keep things under control.
Manage your risk. I mean, you're probably too young to remember, but guys used to chart the market by hand.
Yeah, I've a bunch of my buddies that I kind of worked with for years over at Thinkorswim and TD Ameritrade. They not only do they tell me stories, they're the guys that are like, I had graph paper down on the trading
Yep.
floor, and I'm like, really?
Yeah, when I was down there, I used to get, they used to sell, I don't know what the name of the book was, but every Monday I used to buy the book with the updated charts and then go home at night and use the pencil and, like, put the high-low close in. That was really the only way you could do it, but long time ago. So you said that, you've learned from other people's mistakes and working at TD Ameritrade. Just for new traders in the options markets, what kind of mistakes do they make?
Average contract size is way too huge. It's the number one thing. The average retail client trades far too large for their accounts. I know it sounds like, okay, what's large over there? Just their average contract size is simply too big. So what they ultimately do is they've got far too much risk in any one trade. If you look at like how a trading firm runs, and I'm not saying that an individual sitting at home is going to run like a trading firm, but if you look how a trading firm runs, they do, hundreds, sometimes even thousands of trades. Every individual trade is nothing to the greater mass of the portfolio. And really, retail traders do the exact opposite. They make every individual trade. That is their risk. You just need to break it up and do smaller, be more efficient in those trades.
Yeah, I think from the prop trading I've done, I've noticed, if I get too big in one stock, you become too focused on it. But if you kind of spread things out and you have three or four, even now, when I'm swing trading or whatever, if I have too much in one position and you just focused on it, and you see things
Yeah.
that really aren't there. Whereas if you have, 5 contracts, 10 contracts, 10, things really spread out, then you're much more balanced. So that's a great point.
If
Uh,
you
Go ahead.
Yeah, if you think about like every bad thing you've ever done in the market, it surrounds too much allocation in that one trade. Like every single bad thing, like you got out at the worst possible time and the market turned around, it's always the same thing. Like everybody, it's like the underdog that nobody seems to talk about is over allocation. But that's what we looked at the most. Like we studied, different accounts and we looked like, hey, what happened to this person? They let a $200,000 401k slip by them, but they were focused on this $1,000 of risk in an Apple trade. It's pretty amazing.
Yeah, that's a good point. Tell us about simpler trading, and do you need any experience to use the service? Do you have basic courses to more advanced courses?
Yeah, absolutely. You know what? So at Simpler Trading, I'm the new guy on the block over there. I'm just out of TD Ameritrade since like February. I've known John Carter, of course, that owns and works day to day at Simpler Trading. We do the spectrum and the gamut, really, of courses. Everything from this is an option to I did a class actually last weekend specifically in pairs trading because I've loved that topic and nobody teaches that stuff. So I did a pairs trading class last weekend. This weekend, I'm actually doing a sell premium and manage risk class. It is going to be, my beast of a class. Basically, what I've been doing for the better part of 15 years in trading, I'm going to try to encompass into a few days, and it's basically how to go out, how to sell premium. A lot of it in the index products, some of it in the equities, kind of manage the overall risk in it. But again, we go from the, this is a call, this is a put, this is how you structure a vertical spread, all the way to let's sell premium, manage risk, use stocks, options, and futures to hedge off some of that risk. And again, I'm not the big market technician at the group. A few of the other guys are absolutely more of the more technical type traders. Some nice different styles, though, amongst the group of traders over at Simpler Trading.
Okay, what's on your radar for today? Monthly expiration, weekly expiration here. S&P's hit a new all-time high yesterday. We just actually went red on the session here, not by much. What's on your radar for today?
Yeah, so I look at a couple of different products. Obviously, the S&P pretty readily. Right now, what's on my radar screen more than anything is the bonds. I'm watching the bonds bounce right now. Not everybody looks the bonds, and people can look at the ZB or the ZN or TLT if that does it for you. The bonds in yesterday's session, today's session are having a bit of a bounce. Is it going to hold? I mean, I think that today isn't as important as are the bonds going to slip next week and actually pull markets down with them, or are the rates going to keep flying up? That's kind of the talk of the town amongst most of the traders that I kind of confer with on a day-to-day basis over here. Expiration, man, it used to mean something. Like expiration's not nearly as exciting as it used to be.
Yeah, 'cause they have them every week now, right?
Yeah, the weekly options is the greatest thing. I mean, if you actually, if you look at the volume in the weekly options, this is one thing for like every trader should look at this. Look at weekly options and any day, okay, and look at the shortest duration weekly options, and the heaviest volume, okay, is always going to be now in the shortest duration option. And the reason I mention that is it should change the way that like you view markets, because every risk that's out there is in the shortest duration. Like even if you open up like the SPX today, and the SPX, it's the granddaddy of all of them, the volume is there in the 7-day options. They're not trading nearly as many monthlies anymore as they are inside of the weeklies. You look at a product like Apple, it's the same thing. So what matters right now is what's right in front of you. The next 7 days, the next 3 days, the next 4 days. The volumes, again, the weeklies, staggeringly large versus the standardized expirations these days.
Yeah, you get your bang for the buck. We've been on the line with Don Kaufman. He's Chief Derivatives Instructor for Simpler Options, giving us a lot of great tips on the market. Don, thanks for joining us. Have a great weekend. We hope to have you on again soon.
Thanks a lot, guys.